There, and welcome to Safe Option Strategies. My name is Jeffrey Dunyan, and for the next little while, 20 or 30 minutes or so here, I'm going to talk to you about how to make great money in the stock market no matter what. By way of a quick introduction, I have been teaching people how to trade stocks and options in the stock market very successfully for getting close to 20 years now. A little bit shy of 20 years ago, I started trading and learning a method of trading that is incredibly consistent, incredibly safe, and honestly, it's the absolute best way to be involved in the market. It's for beginners, it's for advanced traders, it's for anyone who wants to put their money to work for them in the stock market and have some peace of mind that they're not going to take big losses. Be able to sleep at night knowing that your money can grow, but it's protected at the same time. And I'm going to give you just an introduction into what we're doing so that you can hopefully make a decision on whether you want to find out more information or possibly join our program and become a member of Safe Option Strategies. I want to be really upfront and honest with you right now before I go any farther in this presentation. Your computer's not stuck. It's going to stay on this screen for just a moment while I get a couple of things out of the way. And again, this is just to be crystal clear so that there's no confusion or no question about the purpose of this presentation and about what you can expect to learn in this presentation. It is not my intent right now to teach you everything about the way we trade. It's not my intent to teach you the details of how our strategies work and why they work and what to do when certain things happen in the market and what to do when certain things have go against you. A certain stock trades against you or doesn't do what you expect it to do. This is an introduction class, and in the spirit of being completely transparent, I hope that over the next 25 or 30 minutes, I show you enough information to get you interested in digging a little deeper, looking a little farther into our company, and possibly purchasing one of our education packages. We have at Safe Option Strategies hands down the most affordable, complete education package you're ever going to find. We don't nickel and dime people and sell them something for $30 or $40 or $50 and then get them hooked for a month and then want to sell them something that's $1,000 and then get them hooked on that for 6 months or so and then try to upsell them for something that's another $2,500 or $3,000. That's not what we do at Safe Option Strategies. We have a very complete program. It's a little more money up front than some of the other stuff that you've probably looked at, but it's a complete program that doesn't string you along, making you believe you can learn everything you need to know to be a successful trader and then find out that you've got to pay more for the next part and pay more for the next part. So I'm being brutally honest with you. The purpose and the goal of this presentation that I'm doing right now is to get you interested enough to take a closer look. Now, with that said, I hope you learn a couple of things in here that you can use and that will be valuable to you, even if you never have a desire or never want to join our program. I still want you to listen through to the end because you might pick up or glean just a little bit of information somewhere along the way that would be incredibly beneficial to you, and I will be happy for you if that's the case. But take a close look at what we're doing and see if you think it's a good fit for you, and then call us or email us and ask us questions. I'll show you a way to get an incredible discount on our program if you get to the end of this presentation and you decide, you know what, this is what I need to get really good and to get better at trading. So with that said, let's go ahead and dive in. Just earlier today, I took a screenshot of the last 6 months of the Dow Jones Industrial Average. And as you can see, this thing has just literally gone straight up. I mean, it has been absolutely incredible the way this market has just skyrocketed to the upside. And it just seems like it's never going to stop until this last couple of weeks. And then all of a sudden, things got a little wobbly and things got a little bit shaky. And I'll tell you, if you haven't paid really close attention to the markets, the thing that sort of flattened this trend over the last couple of weeks was one announcement made last week about a rise in capital gains taxes, an increase in capital gains taxes. Now, that might not seem like a big deal to you. A lot of people don't think about that or they don't worry about that because they say, I'm not making enough money to be subject to big capital gains taxes, or an increase in capital gains taxes is only going to affect a little bit of my portfolio and it's not going to affect a lot of it, and it's just not going to be that big a deal. If that's your mindset, I just got to tell you, with all due respect, and I don't mean to insult anybody and I don't mean to offend you, you could not be more wrong. When the capital gains taxes go up, people with a lot of money, including corporations, including brokers, including large banks, they pull money out of the stock market. And they pull money out of the stock market because there's other places they can invest it where they can grow it without losing as much of that growth to capital gains taxes. And when that happens, everyone who is tied to the market in some way or another loses money. They lose money because the stock markets go down, the indexes go down. That means the individual stock prices are falling. And do you know nearly 2/3 of the country are tied into the market in some way or another with their retirement or their pension or their 401k or their self-directed IRA or their company-directed IRA? Do you know 2/3 of the population of the US are tied into the stock market and will lose money on an increase in capital gains? And that's not a political statement. That's not a speculation. That's not a guess. History has proven it every time it happens. So even though we had some other things that caused these little pullbacks right here, we had quick recoveries. This one might not be quite as quick. This little wobbling right here might be the beginning of something that causes more of a downturn in the market. And you've got to know how to protect yourself. Back in 2007, the stock market started to get a little wobbly at the end of 2007. Didn't start to go way down. It just started to get a little wobbly. It started to flatten a little bit. Had a couple of pullbacks, but mostly it was just kind of flat. And then do you remember what happened? If you weren't in the market then, you might not remember, but we had the biggest drop in the market that we have had in decades. The three major indexes, the Dow Jones Industrial Average, the NASDAQ, the S&P 500, they were down on average a little more than 50%. Now, recently, turn back the clock a little over a year ago at this time, and we had the biggest stock market drop that ever took place in a short period of time. If you go back to mid-February, when the market started to tip and go down last year, and we lost about 35% in these indexes in a period of about 2.5 to 3 weeks, that was the fastest drop we've ever had, but it was only about 35%. This was the most sustained bearish market that we've had in decades, and ended up taking the Dow Jones Industrial Average down right around 50%, maybe a little bit more than 50%. Now, it would be probably a little disingenuous for me to sit here on this presentation and just try to scare you into saying it's going to happen again. You got to do something now. If you don't do anything now, you're going to lose all your money. I don't know. I'm going to tell you honestly, I don't know. I strongly suspect that with some of the economic policies that are being rolled out, with increase in personal taxes, with increase in corporate taxes, with increase in capital gains taxes, with massive amounts of government spending. And it doesn't matter if you're in favor of it or not. It doesn't matter to me. I don't care if you're absolutely opposed to this massive government spending that is being proposed and that's already in place, or if you're completely against it. It's going to affect the stock market. Short term, it's given the market a little bit of a boost because it's pumped a lot of money into the economy. But at some point in time, you've got to pay the piper. And if you want to be protected from that, if you want to not only give your money a chance to grow, because I still believe the stock market is the absolute best place you can put your money. There's no better way to create wealth than the stock market. But if you want it to be able to grow and keep it protected at the same time, there's two different things you're going to have to learn. And I'm going to start with the collar trade. You've got to learn how to collar trade, especially if you currently have or you want to have stock ownership positions. Now, if you want to trade options only, bear with me for a few minutes and I'm going to get to that. For right now, I'm going to focus on people that own stock or want to own stock. If you own stock in a company, you've either been gifted it through some type of company stock purchase program, or you've bought stock, or maybe you've inherited some stock, and it's an asset. It's a tangible asset, and you need to protect it. The collar trade is the ultimate way to protect stocks. The collar trade works like this. If you've never heard of it, it's simple in concept. It takes a little bit of time and a little bit of effort and a little bit of learning to do what I'm going to show you in just a minute with it. Here's how the collar trade works. You have stock, you purchase it, or you already have it. You get a long put option, which gives you the right to sell your stock at a fixed price for a certain period of time. If used correctly, a long put option works in almost every imaginable way, the same as an insurance policy works. So you get a long put option, it works like an insurance policy. If you understand anything about covered calls, short call options, someone pays you money for the right to buy your stock away from you. It's kind of like taking some earnest money up front if someone agrees to buy your house, but only if they'll buy it at a certain price. And if they're not willing to pay that price, they're going to lose their earnest money. And you're on the side of that, with the home, you're the homeowner, and you're going to get someone else to pay you for the right to buy your stock away from you, but only if it goes up a certain amount or goes up in value. So we use the covered call option as a way to bring in some credit to help pay for the long put. And here's what happens when this trade is in place. This is a protective trade. You can grow your money tremendously. I'm going to show you how to do that in just a minute. But this is how a collar trade protects you. When the stock goes down in value, the long put option proportionately goes up in value. And that's what makes up the difference. If you had a stock that was worth $100 and a long put that was at a $100 strike price, and your stock went down to $50 a share, that long put has to be worth a bare minimum of $50 per share. So you've lost $50 on the stock, but you've made $50 on the long put. And the covered call is just a mechanism that is there to help you pay for the long put. So this is how a collar trade works, and this is how a collar trade protects you. Imagine you went out and bought some shares of a company that's trading right around $100 a share right now, and something happened with an earnings report, something happened with interest rates, something happened with oil production. You have a stock, and all of a sudden, something catastrophic happens, and that thing drops 20% tomorrow morning at the open of the market. And don't think that can't happen. Stranger things have happened. If you just have that stock by itself, 100% of your investment in that stock, 100% of what it's worth, is constantly at risk. You could lose the whole thing if you just sat on it and didn't pay attention and let it go down. Unfortunately, what most people do is they take a big hit, 15, 20%, and then they sell down here. They weren't the ones that sold up here when it was going down. They sell down here, and then they're happy if the stock continues down, but if it turns around and goes back up, they're getting back in here, and by the time it gets back to here, they've still lost money. A collar trade completely takes that out of the picture. It completely erases the possibility of that happening. And we use a collar trade not only for protection, we use it as a way to grow a position, okay? Have you ever heard of dollar cost averaging? I know you can't talk back to me, you're watching a recording, but dollar cost averaging simply works like this. You buy a stock for $100 a share. Stock goes down in price a little bit, but you still believe in the company. You still believe it has great value in it. You buy some more shares at $90 a share. Now you've got 2 shares of stock instead of 1, and the average price on them is $95. And the stock goes down a little bit farther, but you still believe in the company. You still believe it's going to come back and it's going to bounce back. Now you buy another share of the stock down here at $80. And you've got some shares at 100, and you've got some shares at 90, and you've got some shares at 80, and your average on all of them is around $90 a share. And maybe the stock comes all the way down here to $50 a share and you buy some more shares here. And when you add up all the shares you have at the different prices that you picked up, maybe you've got all of your shares worth about $75, $76 a share. That's dollar cost averaging. That's not a bad thing to do. I would never tell someone that dollar cost averaging is a bad thing to do. I would ask this question if you're going to do that. Two questions, actually. What happens if the stock never comes back as far as you think it's going to, or you think it should? That's the number one question. And number two, at what point in time do you stop spending money on that stock? That can be a pretty heavy burden if you're going to buy shares here and add more here and add more here and add more here and add more here. At some point in time, you might run out of money to buy shares, and you might get the average price all the way down here to 75, but you're still at a 35% loss if the stock's trading at 50. Overall, you've still taken a big loss on this position. So number one, what if the stock never recovers? And number two, what if you run out of money to keep buying shares to try and lower that average cost per share? With the collar trade, when the stock goes down, we can take the profit from these long puts and we can use that money to buy shares. So our average price per share comes clear down here where the stock is currently trading. Let me just give you the numbers real quick. Let's say we bought a share at $100 and the stock fell to $50. And we didn't do anything on the way down because we don't know if it's finished going down. We wait until maybe it hits there and bounces back up a little bit and we feel confident that it's hit the lowest point it's going to. Now that's an educated guess, but we teach you how to do that. Now what we have is a long put option that's worth at least $50 or more. And now the stock is trading at $50. So when we sell this long put, that's $50 money in our account. And when we buy more shares here, that's $50 money out of our account. So what we've done is we've added shares and we've paid nothing to do it. There has been no additional investment. So now we have one of those shares worth $100 and another share worth $50, except wait a minute, this share down here was free. This money paid for it. Our average price for these two shares of stock is $50 a share because one of them was for 100 and one of them was for 50. Actually, it was for 0. I keep saying it was for 50. Our average price is 50. If the stock never goes back up, remember the two questions I asked? What if it never goes back up? If it never goes back up, you're still sitting here to break even. That's the worst thing that happens. My other question was, what if you run out of money to buy more shares? We didn't need any more money to buy more shares. We sold the long put to buy more shares. Now, let me show you how cool this is. Let me show you just how amazing this is. A person joined our program back in, it was around June or July of 2017. And this individual had bought some shares of Snap right when they IPO'd, right when they had their initial public offering, bought some shares of Snap, 300 shares, and they were up here around $22, $23 a share. You can see that the price is over here. He bought in over here close to the IPO, and over the course of the next few months, it just dropped and dropped and dropped and dropped and dropped. He got a hold of us right around here and said, wow, I'm just bleeding money on this thing. And now he didn't have the benefit of knowing that it would do all of this over the next couple years. All he knew at that point in time is that he had bought it high and it was really low. And he said, look, I got to, at the minimum, at the bare minimum, I got to figure out a way to not lose any more money. He looked at a presentation just like the one you're looking at right now. He joined our program. And for the next few months, we taught him, we helped him get a collar trade in position. We helped him protect the trade and make sure he wasn't going to get burned, wasn't going to get stung. Came back a little bit from the lowest point it was at. Had a nice big jump to the upside. And then it started to sort of tip and go down. And we said, let's get a collar trade back in place right here. Let's get some long puts in place right here. And let's make sure you're protected. Now, even when we did that, we didn't know that this would happen over the course of the next 9 to 10 months. But it did. And what happened is when it dropped and looked like it was going to start coming back up right here, he had enough money from those long puts to add 100 shares. Went from 300 to 400 shares, but no additional investment. He didn't have to spend any more money. Stock went up a little bit, started to tip again. We got a collar trade in place right away. Stock dropped dramatically. Had the money from 4 contracts of long puts, and when it started to turn around, he was able to more than double his position at this time, because at this time the stock was only trading for $6 a share, and he had money from a lot of long put contracts. And so again, with no additional investment, he added 500 more shares, taking him up to 900 shares. Stock rallied, started to go back up. Had a little wobble for a bit, started to go back up. Lost a couple $100 right here. I'm not going to exaggerate. I'm not going to lie or make up numbers. Lost a couple $100 right here because when it started to tip, he got a long put in place. And then after a brief period down, it started to go back up, and he lost a little bit of money on those long puts. That's part of the process. Wasn't a big deal. When he got back up around $18 a share on this stock, and he had 900 shares, he was 125% profitable. Now, here's what I want you to focus on. The stock's trading at $18 a share now. He bought originally up around 24, 25. That stock was still down from where he originally purchased it, but he was now profitable 125%. Never made an additional investment. Okay, I'm gonna clear all of my marks off of here for just a moment. Getting it a little too gummed up on the screen here. All right, stock wobbled again. Guess what happened? Well, you don't have to guess. What happened in February of 2020? COVID hit. You know what was kind of cool about this? This was just, admittedly, this was a little bit lucky. Instead of collaring it right here when it started to tip on COVID, he collared it right here because there was an upcoming earnings report. And it was, admittedly, it was a little bit lucky that Snap was reporting their earnings just a little bit before COVID hit. And when they reported their earnings, they took a hit, and he had protection in place with those long put options. He had his insurance policy in place, and then COVID hit and crushed it. Went way down. And not until it started to turn, he didn't get more shares here because on this day in March, we didn't know it was finished going down. Even on a couple of these up days, we weren't certain it was going down. It was up around here when he said, okay, it's going back up now. And he added 400 more shares with no added investment. And in July of last year, when Snap finally got back up to where he originally bought it, he had 1,300 shares worth $33,000. Subtract from that his $7,200 investment, and he had $27,000 profit, or 376% in 3 years and 3 months. Well over 100% per month. Now, I put this together July of last year with his permission to show people. You want to know what it's worth now? Because fast forward about 9 more months. Watch your screen really close. Watch these numbers change on that middle bar that I've got right there with the text in it. Watch these numbers change. Because here's where we're at right now. Snap is worth $60 per share right now. He's got almost 1,000% profit. And this is off a little bit because it's actually been about 4 years now. Now, you could look at this and say, yeah, that's a long time. I want to make money a lot faster than that. Or you could look and say, 983% divided by 4 years is an average of 245% per year. Now, one last thing I've got to tell you. This is important. This is key. This is how to protect your money. That's the primary focus here, is how to protect your money. This is pretty close to the halfway point from the time he joined our program till the time I told this story and shared this with people. This is about the halfway point. At this point in time right here, he had no profit in this position. He was not profitable. He had dramatically increased his number of shares, and he had not lost anything from that initial drop he had prior to joining our program. Now, his number one goal and his number one focus was protect him from any further loss. But as we taught him how to manage and adjust these trades, he's averaged 245% per year on this particular trade. Now, I want to demonstrate to you really quickly that anybody can learn how to do this. Back in October of 2019, having worked a part-time job a couple of summers in a row and saving up money prior to the start of his junior year in high school, my 17-year-old son had enough money to get 200 shares of Ford Motor Company when Ford was trading in the neighborhood of $8.50 per share. Now, he had the benefit of making a little bit of profit as Ford continued to move up and do well through the end of 2019. So he had a little bit of profit in there. And then guess what? Ford Motors had an earnings report kind of middle to end part of January, and he got a collar in place. And right after the earnings report, it looked like Ford was really going to do well. And then guess what hit in February? COVID. And guess what he didn't worry about? He did not worry about any of this money being at risk because I taught him how and helped him put a collar trade on this company. On that big plunge right there, once it recovered sufficient to believe that it wasn't going to drop any further than that, he was able to double his number of shares. Now, Ford has gone up and they've gone down a little bit. They went flat for a little while. They had a nice another little run right there. But just a little more than 1 year later, he had double the number of shares. It had gotten up to slightly higher than it was where he bought in. But instead of being up 75 cents per share, and what 75 cents divided by an $8.50 per share stock, that's still about an 8.8% gain. If he would have just bought it here and held it until here, he would have had about 8.5% profit. Not horrible. Instead, he had 118% profit. Folks, a 17-year-old. He's a smart 17-year-old. Don't get me wrong. He's an incredibly smart 17-year-old. 118%. You know what Ford Motors is trading at right now today? Let me get my freehand marks out of the way here. Watch this box again with the numbers in it down here in the bottom right. Today, Ford is trading a little over $12 per share. Well, that one didn't come in slow. That came in fast. $4,800. Close to 200% profit in around 18 months. And he is perfectly collar right now. At the time, that should, what a nice typo right there. Report for this week. Whee! That's what we should say about this. Whee! We're making great money. It is perfectly collared for an earnings report coming up this week. At the time I'm recording this presentation, Ford reports tomorrow or the next day. And he's got 400 shares now, and he has a perfect collar trade on those shares. If Ford misses on their earnings and goes down, he's not going to lose a penny, and he'll have an opportunity to add more shares. If Ford goes up, he's doing all of this without needing a short call in place anymore, so there's not even a chance he'll have to sell his stock. And we teach you how to do all of that. Now, everything I've shown you involves stock ownership. It's for slightly longer term trading. What about trading for income and lifestyle right now? What if you've built up a portfolio, you've built up $100,000 or $200,000 or maybe $50,000, and you don't need to make a lot of money, but you need to make a little bit of money, and you need to do it kind of in a weekly or a monthly basis? Well, Nothing kills a portfolio. When you're trying to trade for income, nothing will kill your portfolio more than inconsistency. Over and over and over again, I have heard a story similar to this one, where someone places a trade, they make some good profit in it in a short period of time, they take that profit from the trade, they invest it to what they started with, so that they have more money for the next trade, they make a nice return, they take that profit, they add it to the next trade, they make some profit, they add it to the next trade, and all of a sudden, and this is with option-only trading. What I'm talking about is primarily option-only trading, spread trading. All of a sudden, one of these 4 trades goes against them. But if you've ever traded options, you know that a trade that goes against you quickly can absolutely ruin your day and be at a 50, 60, 70% loss in the blink of an eye. And even though you were doing the right thing by reinvesting your profits, all of a sudden that one hits. And after 3 out of 4 trades worked exactly the way you wanted them to work, you're down 13% from where you started. And this happens to more people, and this gets worse and worse and worse when we go into a bearish market. Folks, if what I think is going to happen happens over the next 6 to 9 months, the next 12 to 18 months, if what I believe is going to happen in this market, this gets worse because you end up only winning on about half your trades, and the other half become losses. And those losses just pile up. You can't even tell that's the word loss. Okay. One of the main things we teach at Safe Option Strategies, in addition to teaching the collar trades and how to protect your money, we teach you how to play spread trades that when they go against you, we teach you how to roll the options and make adjustments to these trades that can still get you out profitable. And here's what happens. The same 4 trades, the same investing of this profit into what you originally started with so that you've got more to trade the next time, and the same 4 trades, and the same thing happens to the stock. But the difference is you were able to adjust it because you set it up correctly, and instead of taking a 50% loss, you took a 0 loss, and now you're up 59% on those same 4 trades, which is 70% better than the other scenario. And speaking only of our option trades, only the option trades that we teach our students and that we share with our students, this is the track record that we've put together since we started sending out trades to our students. As we teach people how to do this, we provide you with trades you can do. And look at what the Dow Jones, the NASDAQ, and the S&P did each of these respective years. And some of these years weren't bad. 2017 was a good year for the Dow and the NASDAQ. Last year was a great year for the NASDAQ. Best year the NASDAQ has had in the last 7-8 years. But look at how we have dramatically outperformed them every single year without exception. We have outperformed them. And I'll tell you, 2 of the proudest things that have happened for me with this company was back here in 2015 and back here in 2018 when the Dow Jones Industrial Average in 2015 and all 3 indexes in 2018 were negative on the year. And we were still producing nice profits. Folks, we can teach you how to do this and teach you how to do it really, really well. And we can help you make money at the same time you learn it. People want to know all the time, how can I learn the process, have my money protected from day one, and still profit and do it all at the same time? One of the things you worry about when you invest in education like this, a lot of times people will tell you, don't do anything but paper trade or virtual trade for the first 3 to 6 months. Well, you don't want to spend money on a program and have to wait 3 to 6 months before you can make any money. That's not the right way to do it. You've probably heard this before. Feed a man a fish and you feed him for a day. Teach a man to fish and you feed him for life. That's kind of the concept. That's kind of what they're telling you. They're saying, hey, just let me teach you for 3 to 6 months or 9 months or a year, and then you'll know everything, and then you can get in with confidence, and then you'll be out on your own and you'll be absolutely fine. And that's what a lot of these programs do and suggest that you do. And I absolutely believe that you need to learn how to do it yourself and not just constantly be fed. But I always felt like this. I love this saying, and I always have, but I've always felt like it left out one really key important thing. What happens if the man starves while he's learning how to fish? I've got a really good friend, close friend of mine, and I've got a brother-in-law who I'm also very good friends with, who are fishermen. These guys know how to fish. They can do ice fishing. They can go fish in the ocean. They can fish in rivers. They can fish in lakes. These guys know how to fish. Wherever they go, they know the right bait to use. They know how to set up the line. They know how to cast to the right spot. They know when the right amount of tension is there on that line and when they need to set a hook. And I've gone fishing with them before, and I'm horrible at it. But I learn a little bit from them every time. I learn a little bit more every time I go. But here's the point I'm making with this. If we got thrown into the wilderness and had to survive off our ability to fish, there's three different scenarios that could take place. First scenario is we all get put in different places and have to be able to fish to feed ourselves and survive. They would both live. I would die. Guaranteed. I absolutely guaranteed. I'd be the one that died of starvation. They'd be fine. The second scenario is we all three go out together and they're willing to teach me everything I need, but they don't share any fish with me while I'm learning. 50-50 chance that I survive. Having them right there with me, helping me out, maybe I learn just enough, and maybe they're there to give me pointers all the time and constantly be giving me the answers and telling me what to do. 50-50 chance I survive if they don't share any of their fish with me. Third scenario, and this is what we do at Safe Option Strategies, they teach me everything they know and they make sure I'm learning it, but they share their fish with me along the way, and we all three survive. Folks, at Safe Option Strategies, we don't just teach you how to do this from day one in our education program. We send you trades that you can place right away. And we follow these trades through all the way to completion, every step of the way. We've got over 60 streaming video classes that you can watch to learn these strategies. We do multiple weekly trades that we give you that you can follow along with. And if you want to just follow them for learning purposes, that's fine. You have the option of doing that. No pun intended. But you can place these trades with real money from day one if you want. We have a daily live class. Every day the market is open, we do a live class, and we make sure you understand why we're doing the trades we're doing, why we're making the adjustment we're making, when we're going to make the next adjustment. So we are constantly feeding you, not just teaching you. We're constantly feeding you. We have a daily open chat room where members of the program talk with each other and with me throughout the entire trading day. And you get real support from real traders. 2020 was rough to begin with, and even with the recovery 2020 made, a lot of people didn't get back all their money. They took losses so bad right here that what happened right here was not sufficient to get them back. I'm going to tell you really quickly the saddest story of all of 2020. I'm going to pull at your heartstrings just a little bit here. Gentleman called me in November of 2019 after watching a presentation like the one you're watching right now. And we talked about what's going on, and he said, yeah, it sounds like a good idea. Now, I'm going to share with you, because you don't know him, you never will know him. The guy had a little over, I think he had around $350,000, and that was every penny to his name, and he had it in the stock market. And he was living off it. And he was making enough money each month to draw out of that to provide his lifestyle. He was doing okay. But, before I bring that next one, but at the end of the conversation, he said to me, your program is just too expensive. It's just too much money. Folks, he had $350,000. At the time, we were selling our program for $2,500. And before you get sticker shocked, I'll tell you right now, we're selling it for less right now. Don't log off when you hear that. I'll show you a way to get a pretty phenomenal discount. But at the time we were selling it for $2,500, he said it's way too much. Called me again after a couple of really bad days in the market and after watching another presentation like this. And we had the same conversation. He thought it sounded like a good idea, but way too much money. Not going to do it. Market took a little dip right here. for about a week and a half. He called me again. I was polite to him. I was kind to him every single time he called. Never made him feel bad. Conversation ended the same way. It's just too expensive. This is the next place I got a call from him. And he genuinely wanted to pick my brain. Do I think it's over? Do I think it's going to come back? Do I think this is as bad as the drop is going to be? Now, at this point in time right here, of his $300 and some odd thousand, he had lost about 30,000 of it, okay? Not a crazy, ugly, wild loss compared to what he had. Still stung. It absolutely stung. But he was doing some things in here out of desperation. And on a couple of these days where it rebounded up really strong in the market, and maybe we thought that it was coming back a little bit, he got into some new positions and he over leveraged himself in some positions. And when he called me somewhere around here, and I didn't know the market was bottoming out here. I really didn't know that would be the worst it got. But when he called me around that point in time, he had lost about 2/3 of everything he started with from everything he had from the first time he called me. He'd lost about 2/3 of it. Now the market only went down 35%, but he was desperate. He was making mistakes. He was doing things that just were not smart to do. And he had lost 2/3 of his portfolio. And can I tell you how this conversation ended? I'll give you a guess. At the end of this conversation, he said, I just can't afford your program. It's too expensive. And it broke my heart. Now, I haven't talked to him since then. He's never called me again. I hope that for the rest of the year, he got a lot of it back. I genuinely hope that he got a lot of it back. But the losses he took, even if this were 100% gain right here, after losing 2/3 of what you have, think about this. If you had $100 and you lost 2/3 of it, you'd have $33 left, right? What happens if you make 100% on $33? You still only have $66. You're still down 1/3. You're still down 1/3, even though you just made 100%. So even on this recovery, I doubt he's back anywhere close to where he was. And I'm telling you honestly, don't let this be you. Don't let it be you. Don't let a repeat of what happened in 29 come along. And I'm telling you, it's not to scare you. It's the truth. I believe this is coming. It may be a couple months away. I think the money being pumped into the economy with some of the decisions being made by our government right now are going to continue to stimulate it for a short period of time. 3 to 5 months maximum, we might continue in a flat to bullish market. But at some point in time, folks, we got to pay the piper. And what a better time to learn how to do this than if we do stay bullish for another 3 to 5 months. What a great time to learn it, so that when this happens, and it's going to happen sometime in the next year or two, it's going to. There's no way it can't. When it happens, you're going to be smiling. You're going to be ecstatic. You're not going to be stressed that a lot of your money is disappearing. For people only interested in our collar trade course, you can buy it in a semi-annual or an annual program. For people only interested in options in the spread trade course, you can do a semi-annual or an annual program. And for people that want to combine them, we discount it a little bit. We always give you a little bit better price if you want to discount it. You'll notice that the combined program, semi-annual, is less than if you added these two numbers together. But right now, at this moment in time, on the annual program purchases, we are literally cutting the price in half. And we're only going to do that for people who will take the time. You cannot find these prices on our website. If you end this presentation and you go searching for a way to purchase on our website, you won't find these prices. You've got to call or email us so that we can get you set up. And for anyone who takes time to call or email, okay, there's the email address, info@safeoptionstrategies.com, and there's our toll-free number. And only for individuals who will call or email us. Now, there's one other way. On the page that you're on our company website, right below this class, if you scroll down a little bit on that page, there is a form you can fill out that says, please send me more information on pricing. And you just have to put your name, your email address, and only include your phone number on that form if you want a phone call. If you don't put a phone number there, we're not going to call you because we don't have a way to call you. And it's just to answer your questions. Here's the thing, folks. Anybody can get those discounted prices that I showed you on the previous page, but for the people who will take time to send us an email or a phone call, you still have to request the pricing discount, and we send you an electronic order form that you can get that discounted price. But for anyone who will take the time to email or call us and ask us about a limited time additional discount, I'm going to surprise you with an added discount beyond what you see right here. Now, I will tell you the added discount is going to be for anyone who purchases the combined program and for anyone who purchases it on the annual basis. I'm going to give you an even better offer than what you see right here, but only if you take time to call or email. I want you to know something. I have devoted my career to helping people learn how to do this and to get good at it. I've got member after member after member after member who will tell you how much this has improved their trading, how much better they are in the market, how much more confident they are, how much less sleep they lose, how much less stress they have. What we do at Safe Option Strategies is not a get-rich-quick scheme. It is a way to consistently trade the markets and never be afraid of the market again, never be afraid of what might happen next. Give us a phone call. If we don't pick up, make sure you leave a message. I promise we'll call back. Send us an email at info@safeoptionstrategies, or just scroll down the page when this finishes and enter in your name and your email address, phone number if you want us to call, and I'll talk to you about an even better discount. And before I even do that, I'll answer any questions you have. Calling or emailing us does not obligate you to do anything with our program. It's just a chance to see what that added discount is, and it's an opportunity to get any questions you have answered. If we're not the right fit for you folks, I wish you nothing but the best of luck. I hope you succeed at whatever you do. If you think this might be the right fit for you, give me a chance to make it work for you from a price standpoint. You won't be disappointed.